For the past 2 weeks, I've analyzed Meta stock like crazy, diving into so many different reports, going into the company's financials, VR developments, and a whole bunch of other stuff. And what I found was actually really interesting. So in this video, I'm gonna provide you with my price prediction for the stock, as well as all the interesting things that I found during my analysis. Okay, so one of the things that I found that was really interesting when analyzing the stock is these different dips right here. So as you can see here, there was a high, and this was in July 13, 2018. And then there was a particular low where the stock actually went down quite a bit. It went down about 30%, as you can see here. And then there was another low right here. And by the way, looking back, these were phenomenal opportunities to buy the stock. So this is the kind of opportunity that we're looking for. But something really interesting happened around this period, if you remember. And this is the fact that the image of Facebook was tarnished at this particular moment of time. So do you guys remember how back in the day, Facebook was perceived as like, especially Mark Zuckerberg had this really bad image at some point where, a lot of people thought that he was like some kind of alien or that he was emotionless. And most importantly, what happened is the scandal that took place right here, the Cambridge Analytica scandal that happened in 2018 when it all came out. And then Mark Zuckerberg had to testify. And then from there, the image of the company really took a hit. But what's really interesting is that the company, they hired masterful PR firm. I mean, this is not like available information out there, but this is just speculation. But they really turned the image around. And the two things that they did is, first, they changed the name of the company from Facebook to Meta Platforms, just to announce how their intention was to now focus on the metaverse, which I think is really interesting, and we'll talk about that later. But the other thing that they did, and it worked really well, is turn the image of the CEO, Mark Zuckerberg. So as you can see now, the way that he looks now, it's quite different as he was looking before, and also how people perceive him. And in fact, I think they really worked on his image. You can see like some of the stuff that he's posting now is very different from his old days. So you can see this is a current picture now, this is a picture from before, and then this is a picture from, I think, even many years before. So as you could see, the image and the way that Mark Zuckerberg is portrayed to the public is very different, and I think there's a lot of intentionality behind this. Now you see like Mark Zuckerberg being at the UFC events, being with all these different fighters, so that definitely helps to boost his image. And in my opinion, that has allowed the company to continue to grow and be perceived more positively in the general public, which means that the company has newer opportunities that it can exploit for growth. The other thing that the company really has going for it is the fact that it's in a market that has a lot of growth. So as you can see, the compounded annual growth rate for the expected growth of the industry is 13%. And this is only one report. There were so many different reports that I looked at. Most of them, they kind of agree that the growth is somewhere between 8 to like 13%. So I would say that range, the numbers probably going to be more like in the 11%, which is phenomenal growth rate for a particular industry. And there's so many different reasons why, but digital is here to stay, and Facebook is in a really good position to be able to leverage this growth that's taking place. Now, at the same time, the company has had very strong financial performance. So as you can see, they've had pretty phenomenal growth over the last 2 years. So 16% here, 22% here. And this not only extends to the revenue growth, this also extends to the net income growth, which you can see here, it was 46%, 31%. And all of this with phenomenal margins. So as you can see right now, the company has a margin of around 81%, which is absolutely unheard of, something that is very unique. And not only that, but the company also has a very solid balance sheet with just a very modest level of debt. great growth in terms of the stockholders' equity, and then also phenomenal cash flows and phenomenal cash flow growth. And by the way, if you want to know how I got this data, I'm using the Y-Sheets add-on right here, where you could just type the name of the company, like Meta in this case, and then you can just select the ticker or just enter it manually, click on annual or quarterly data, and you're gonna be able to get all of the financial statements, all the different key metrics, cash flow, etc. And by the way, this is how we support this channel, and this is what allows us to continue to make new stock analysis videos. So I would highly appreciate if you could go ahead and check this out. There's two things that are a little bit concerning about the company, and the first is that while the financial performance has been great, the financial performance of the company is really influenced by the macroeconomic conditions that are taking place in the marketplace. So if there's a recession or if there's less economic prosperity, advertisers are going to spend less money on the platforms that Meta offers. So this means that the revenues are likely to decrease. So this is very, very important to keep in mind. And then the second part is that the company is spending quite a bit of money on research and development expenses, which generally this is a very positive thing because this could fuel the next surge of growth for the company. However, the issue is that a lot of these initiatives are not generating any money right now, and they're likely to not generate money in the future because a lot of this money is spent on VR, which for Facebook is generating very little, if at all, revenue, and it's looking so far like this may not change into the future. So for this, I did a whole bunch of research into the market for VR, and also I analyzed a whole bunch of videos and reviews about the company's products. So one of their best products is the Meta Quest, and in this case there's two versions. There's the Quest 3S and then there's the Quest, which is the more premium product. What I see online is that actually the reviews are really good. It looks like the product does what it's intended to do and people have a very positive experience. However, it's not a good enough experience for them to leave what they're doing traditionally, which is just using their computers for some of these functions like playing games or just like being able to connect with people on social media and even like consuming content. What I found in a lot of the research is that people found it really interesting, and maybe like some people were watching movies on their Meta Quest and it was like a novel experience, but then eventually they went back to using their phones, they went back to using their TVs, they went back to using their computers. So therefore, if there's not that sense of retention, it's going to be very hard for Meta to be able to monetize this properly, because if people are not using it consistently, then that really means that the market becomes a lot more limited. So some people are looking into perhaps Meta using this into like niche applications, such as like for education or for allowing people that need specific training for different trades to use headsets like this. But this kind of like general product that Meta is going for, there's no guarantee that it's going to work in the future, and is definitely something that as an investor you should keep an eye on. Now let's bring all of that information together with the price prediction. So as you can see, this is my model and it's super simple, and the reason why is because simple models lead to good results as long as you have some very good solid assumptions, versus if you have a very complicated model, there's so many different moving parts that you could miss one of them and then it screws the whole thing up. So that's not what we want to do. But as you can see, the main assumptions are this. So we have revenue growth of 15%. This is based on the market growth report estimates that I showed you before, as well as the company's own revenue growth rate that we've seen recently. Now, this is an aggressive number, but at the same time, I think it's, has a little bit of a conservative taste to it. So that's why I picked this particular number. And then the terminal price to sales ratio, this I picked based on what other similar companies are trading for. And then also the fact that the company has great margins, great growth. Now, generally, this number is a little bit aggressive, but for a company that has this growth and this good of margins, this number actually makes sense. So as we can see, we're discounting doing this at 11%, which is pretty reasonable given today's interest rates and giving us pretty decent return on the investment. And as we can see right here, this gives us, based on the current price, which this is coming from White Sheets. I'm gonna refresh actually this right now so we get the latest price. So here we go, now it's 610. And by the way, please check out White Sheets. This is how we pay the bills. I would really appreciate it. We see an upside downside of around negative 11%. So yeah, there is a negative percent, but there is an argument where you can still go ahead and buy the stock. And will it grow? Most likely than not, it will, but you may just not be able to achieve, this return. Maybe you achieve an 8% return. And if you're happy with that, then at that point, you might consider buying. But if you're an investor that's seeking a higher return and maybe you're like, oh, I could get this return just like being in the market, then what I would do is put this price target right here on your watch list so that if the stock price drops, then you can start to build a position in the company and then benefit over the long term. And by the way, if you want this spreadsheet, it's going to be linked in the comments. Let me know what you're doing about Meta stock in the comments, and if you've enjoyed this video, make sure to subscribe to the channel, and I'll see you in the next one.